Now let's practice our project appraisal skills. And we start with the understanding of relevant cash benefits and relevant costs. So, relevant means those that change because of the decision has been taken. We have a bookstore that occupies 100 square meters and brings about 10,000 of weekly contribution. You want to open a coffee stand that would occupy 2 square meters. To do that, you would have to hire a barista at $500 a week. Mhm. So, hiring a barista is this extra cost. So, that is something that is experienced because of the decision to open a coffee stand. So, baristas pay would be a relevant cost. The overall rent paid is 400 weekly. When we are talking about performance evaluation and evaluating the divisions, evaluating products, projects, then obviously we would take this 400 and we would split that. We would add 2 shares to the coffee stand and 98 of those to the bookstore because they occupy this square meters in this proportion. But when we're talking about relevant costs, we do not take into account that because rent is going to be paid no matter what. Each cup of coffee costs $2 to make and would be sold at $5. So contribution that is paid per cup is $3. And we need to take this $3 and multiply by the quantity. And we know that it will be 1,000 cups of coffee. So that would be 3,000 of contribution. And coffee customers will increase sales volume of books by 10%. Well, the sales that would contribution with a plus sign, then books extra sales would be, well, actually, we are taking not sales, but contribution. So we need to take sales and we need to take this variable cost. But in this case, when we're told that it brings us 10,000 weekly of contribution, we just take 10,000 and multiply it by 10%. So it's 1,000 more. And this means the relevant benefit of this decision would be 4,000 minus 500. So that is 3,500 weekly.